Hey everyone, welcome back to my YouTube channel. I am Xavier Smith, and today I'm going to go over some of my favorite options for the start of February. So let's get into it. I'm going to be going from what I deem the safest to then the riskiest options, but really there is good percentage gains all over the board. Clearly the riskiest have more money in them, and that's because they have earnings coming up. Okay, so I have four stocks: Ford, SiriusXM, SMCI, and Snapchat. And we're going 2 weeks out, ending February 7th on all of these, and they're all puts. So let's start it off with Ford, Ford Motors. Okay, so we can check the 3 months out or like the year to date. I'm just saying this, it's at a decent price right now. And past month, it kind of ran itself up from like lowest it went was 957. And it kind of ran itself up to 1030. Of course, it went like a little too high, a little too fast. So it kind of corrected itself a little bit. So it can really go any direction. If we wanted to look Bollinger Band, it's middle. It can really go any direction. But what I'm looking at is like this was a big drop for Ford. Let's look at year. Like 14 down. Like this is a big drop going down to like 950 or 965. That's a huge drop. So if we look over here at options, sell, put, again, expire February 7th, just because, like start of February. We looked down here, $10 put, you could do. This is a 3.2% gain if you're happy with that, meaning your break even is like 968, right? Like your buy-in would be 968, which is great price. It's like the lowest it's ever gone. But, well, lowest it's gone, yeah, in a long time. So $10 looks decent, but it was just at like 960, and you're like, it could execute. If you really don't want it to execute, though, be a little safer and just take a gain. You can take this 9.5, which it hasn't hit 9.5 in a long while, and it's kind of on its way up. It doesn't have much reason to go down because Trump tariffs aren't really coming very soon. So 14 cents here for 9.5, and you can look, that's 0.14 divided by 9.5. Oh, I didn't mean to do that. Equals, it's 1.4%, like times 100, you can find the percent, divide it by 2, and you're getting 0.7% for 2 weeks, which looks pretty good. I like 0.7%, so you can put a little bit of portfolio away in Ford. I like that 9.5. You can always go that 10. If you'd actually want to buy into the stock, I would go 10. If you just want the earning, like if you just want to take the premium, go 9.5. But 10 also works well because that's 3.2%. Okay, now next, our next safest is Sirius XM. Warren Buffett's in this one. Um, we can look. It's pretty far down, but it's making a comeback. Warren Buffett started buying in at 26, and he's been buying in for a little while here. So it was high at 28, kind of dropped down, bounced really hard off 20.5 to 23. Then it kind of took a little dip again to 20.8, and then it's kind of just sitting at 22. And it can go either way. Again, we can look Bollinger Band, and again, it's the middle of the Bollinger Band for 3 months, 1 week. Like it's literally just middle Bollinger Band. It could go anywhere. So what I'm looking at is that it really doesn't go below $20, right? If we look at 1 month, it doesn't really go below $20, and this is the lowest it's really been. I think we can look at 52-week low as well. 52-week low, $20.47. So I'm saying it really doesn't go below $20.50. So that would be a good place to sell a put somewhere around there, or if our break even was lower than that. Okay, so we just trade some options here, sell a put. You can always look further into these. Like I'm just going again. You can always do January 31st, like this next Friday. Like this is paying almost 1%. But really, I'm just going out to February 7th because I'm comparing all my options right now. Because most things are good for February 7th. 2 weeks out, I'm fine with. I just want to lock my way. I want to put my money away for 2 weeks. So I'm looking for 2 weeks out. And here, 21.5 is 72 cents, which is good. It's like 3%, but it could go below 21.5. Like it's been riding near 21 a little bit. It's mostly 22, 23 areas, but it could go down below. So if you really don't want to buy the stock and you just want the money, you could look all the way down 20.5. That looks nice. 35 cents in 2 weeks. That's what is it? 0.35 divided by 20.5. That is 1.7% divided by 2 times 100. This is how much you're getting a week. You're getting 0.85% a week. Nice. But again, it's gone below 20.5. So if you really want to be safe here, you could go this $20 put, and that's 23 cents divided by the $20 you put in, and you're getting 1% divided by 2 times 100. So you are getting 0.57% a week. So if you really just want to take the money, then I would do the $20 put. This is another great option because it's 0.5% a week, or you can get like closer to 1% a week up here. And really, I would buy this stock. I'm already like 1,000 shares deep into this stock. But again, I've been playing options on this stock for a while, and it's good, right? I think it could definitely go up back to 28. So if I got into this stock, like if you put an option down at 21.5 and got in, I would just sell calls over and over again and just make all my money. Okay, there is Sirius XM. Now our next one is SMCI, Super Micro Computer. I like this stock because I've made a lot of money in options before off of it. So it's at a decent price right now. Like it was at 118, kind of fell off, right? Almost unlisted, delisted. And then it went down to like 18. And the second it hit 18, this is where I bought in and did some options, like on this up go here. After it hit 1850, it just shot up. People did not want it that low. Went up to 40, and then it's kind of sitting around at 30, 33, right? 30 to 33. And you say, okay, what's going on here? We look down here. Earnings are February 7th after hours. What's important to note is that is a Friday and after hours. So options end on Friday, but when the market closes. So that these earnings do not affect, like they still affect the option price because there's more volatility pre-earnings, but like the actual earnings don't come out until the options expire. So that is something important to note. That's why this is safer than Snapchat. Okay, so sell a put expiring February 7th. This is the day of earnings. So they expire literally like 15 minutes before earnings come out. So even if earnings come out and the stock shoots down in value, it doesn't matter because the contract ended before earnings come out. So that's important to notice. Like you could always go 33 here and take like 9% off of it, but I'm not really comfortable with that. I'd like safer things. So you can keep going down and find a price that looks good for you. But honestly, my dad and I went down here and said, hey, he just wants like 0.5% or 1% a week. So we looked down here at even 20 was paying 18 cents, which is nice, but he was thinking 23 because a $23 put, $23 of 23 divided by 33.31. This is how much the stock has to drop. The stock would have to drop 31% for that to execute in 2 weeks before earnings. Like clearly there's high volatility before earnings coming out because there's a lot of speculation, but 31% down in 2 weeks, I don't know about that. Because if you look back at the graph, you're going to see if it hits 23, like when it hit 27, it really shot off. Like there's a ton of resistance. And also recently, we can look at, which I probably should have shown a few minutes earlier, when it hits 30, it's got some good resistance, right? Like it just bounces off 30. It does not want to hit 30, like $30, 4 cents, $30, 8 cents, shoot up. It does not want to hit $30. So even though they're like, since we have earnings coming up, it could go below 30 or it could shoot up, right? So I was just being safe and taking like percent wise some decent things, but you could always go for $30 if you wanted to. $30 is $1.67. You just have to say, am I fine with buying at like 28, 26? Which 167 divided by 30 is how much money you'd be getting, like what percent? You'd be getting 5.5% divided by 2. You'd be getting 2.8% per week for 2 weeks. But honestly, if you want to just be safe and just get some money on your hands, you could go down to like 27, which looks fine. It has to drop $6. Um, that's like 3% right there. 1.5% a week. Great. If you're just looking for 1% a week, you could go all the way down to like 24 here, and you're getting almost 1% a week. So SMCI, this expires right before earnings come out. So yes, there's more volatility before earnings come out, but it expires right before. So it's not like earnings come out and then the option expires. It's the option expires, then earnings come out. So I'd say it's safer than if it came out after earnings. And that's why Snapchat is less safe than this. But yeah, you can always go down here, and anywhere down here, selling a put is going to get you like 1%, 2% a week. So great. SMCI, I love it. I'm probably going to hop in it. You could probably still hop in that start of February, because this is January 26th right now. You can probably hop in start of February and still get a ton of money for those puts, because it's just great because there's earnings. There's so much volatility. Also, this stock just has so much volatility that options are always worth so much. So it's a great one to have in your back pocket. It might not be the best company ever, but again, it meets what I like: market cap over a billion. It's almost 20 billion. Average volume is over a million. It's like 30 million. And price to earnings is between like 1 and 60. So that's pretty nice. Okay, and then my last option for you guys is Snapchat. Some people would not like to get into Snapchat, but honestly, you look at it, Snapchat's been sitting at the same price forever, right? But really between 9 and like 10, 9 and like $12, but mostly like 10 and 12. And right now it's at 10.89. It just dropped from 13. So it's got some room to go up, definitely. Again, if we look Bollinger Band, yep, it's in the middle of the Bollinger Band. Who could have guessed it could go any way? Okay. And then we look down here. Are there earnings coming up, which is an important thing to note. Some people don't trade options when there's earnings coming up. But honestly, sometimes I do just trade options because I'm okay to take a little bit more risk for that much higher reward. It's like a 3 times more reward when earnings are coming out. Okay, so earnings are coming out February 4th. Important to note because options expire February 7th. So you could do an option for like January 31st or February 7th. And with earnings on February 4th, that means there's a lot of things that could happen before February 7th. All right. But we can also note that it did just drop from 13 and it's got some room to go back up. All right. And they expect earnings to keep growing, and they usually beat or make earnings every time. So, important things to note. Now, let's check out the options. Also, I would be fine with buying this at like 10.5. Whenever it gets close to 10.5, it usually bounces back up. Right? That's 3 month, 1 month. It kind of gets close to like 10.5 and it just goes back. So, important things to note: 10.5 looks like a decent price, but again, with earnings, there's going to be a lot of volatility. I would hope it goes up because if they beat earnings, it'll probably shoot up, but we can't expect anything. Okay, so if we're going 2 weeks out, because start of February again, you could tell I already have a lot of options here. And this was before I found SMCI, or I looked at like Sirius and Ford a little bit deeper. But this is like a risky part of my portfolio, and I'm just hoping it turns out well for me. Okay, 10.5 we already established was a price it can go without earnings, right? That's like its resistance point. So 82 cents for 10.5 in 2 weeks. Like this is, if there wasn't earnings, it'd be decent. 82 divided by 10.5 divided by 2, that's 7.8%. That's 3.9% a week. So if you just wanted to like sit on it, you said, I'll buy it 10.5 because like long run, it looks like it sits at 10.5, then you could take off like 7.8% and just buy it at 10.5. And really that 80 cents would buy you down to like 9.68, which is a great price, right? But what I'm looking at here is I said, okay, it's got to drop like 8% for $10. We're going to say like 13% for 9.5 and like 18% for 9. And I'm fine with that, because the only reason I'm fine with it is because I'd be fine with buying it at anywhere in the $9 range. So this $10 call here is paying 59 cents. That's 5.9% in 2 weeks. Great, right? That's way over the 1% a week I want. And I'd be buying at like 941. Great price. Because if you look at this, like selling a call for 1 week out without like anything else, this is up 11 cents and they're still paying 2.7% ish. So I'm saying these calls are already worth so much just going out a week. If I do have to buy the stock, I'm just going to sell calls. And you can sell calls indefinitely until you make money. That is just the rule of options. You can sell calls until you make money on a stock. It's that simple. Um, okay. And then, yeah, we're selling puts down here. Clearly, $10, you could go if you're like, well, Snapchat's probably going to beat earnings, so I'm fine with 5.9%. A little more conservative, $9.50. That's 39 cents. Still like 3.9%. I don't want to do the math. That's like 2% a week. And then this $9 is 24 cents, which is still like 2.5%. So it's like 1.25% a week. So I'm fine with all of these because I'm taking risk here. Like this is 6%, this is whatever. And I sold them a little while ago. And then down here, you could even go to 8.5 if you want like two. This is like 1% a week still. And then this is like nothing. This is almost 1%. And then it's 2 weeks, so it's like 0.4% a week. All right. Well, I hope this video was helpful. I hope you guys enjoyed it and you look into some of these options. You could go into all of them. Remember, like the further you are from the strike price, the further your put is below, the less premium you're going to make, but really the safer you are. So remember, our like things we looked at were Ford, SiriusXM, SMCI, and Snapchat. They were all 2 weeks out. And this went from safest to riskiest. So I said Ford and Sirius were pretty safe because there's no earnings. SMCI is safer than Snapchat because the earnings come after the option expires. And then Snapchat is the least safe, but can still get you great returns like 6% for going to the $10 put. But the earnings are middle of the week. So really stocks could go anywhere. Okay, well, thank you guys so much for watching, and I hope to see you guys in the next one.